Hello and welcome. Great to see everyone virtually today. Welcome to the Payments Canada Summit session on the gig economy and how the payments industry will be affected by just that, the gig economy, and the increase in gig workers across the United States and globally. Today, we're going to explore those trends and how that will also affect the future of payments. So without further ado, I'm your host, Elle Bruno. I'm the Managing Director of the Techstars and Western Union Accelerator. I will start by giving you a little bit of idea of the run of show for the next 55 minutes. So I will be doing a Q&A with this awesome panel, Craig and Scott. And then please type in your questions as we go along, and we will certainly leave some room at the end, probably about 15 minutes or so to address your questions. And then at the end, we will be putting up a screen that has some details on how to go into some breakout rooms after the session as well. So I'd like to begin by introducing our panel. And as I mentioned, I'm the Managing Director of the Techstars and Western Union Accelerator. So I'm very close to both Western Union and the Gigwage team. So this is even more exciting than most events I attend. We are a innovation-driven accelerator, and we partner with Western Union to source the best early stage fintech companies and payments companies. And so we were lucky to have Craig Lewis and Gigwage as a graduate of our 2020 class. And Scott Johnson is a member of the Western Union team. So I will let the two of you introduce yourselves. Craig, go ahead.
Thanks, Elle. Appreciate it. Craig J. Lewis. I'm the founder and CEO of Gigwage. We are a payments platform for the gig economy. So we help businesses of all sizes pay all types of contractors, freelancers, and gig workers. And we're just, on this all-out mission to drive kind of economic empowerment and make sure people can get paid when they want to get paid, where they want to get paid, and how they want to get paid. We're a Series A company. We're a team of just under 30 people now, remote first, dispersed across the country, headquartered in Dallas, Texas, and super happy to be here and having this conversation today.
Fantastic. Scott.
Thanks, Elle. I'm Scott Johnson. I lead the product management team for Western Union Business Solutions. Western Union Business Solutions is the business payments arm of Western Union. So we sell payable and receivable solutions to businesses of all shapes and sizes, including small and medium-sized businesses, financial institutions, universities, and a number of fintechs, including payroll companies, gig economy companies, et cetera. So we operate in a few dozen countries around the world, and our specialty is really helping companies pay for things and get paid for things and manage the FX risks associated with paying for things or getting paid for things. Excited for the conversation today.
I am as well. Okay, well, let's jump into it. So Gigwage estimates that in the next 10 years, 60% of the global workforce will be an independent contractor, which I certainly know we're seeing as we source companies and look at founders every day looking for solutions in the space. So let's discuss specifically the payment implications of moving forward from salaried workers to gig workers. And I know that's a really broad question, so take it wherever you want to take it. Craig, go ahead.
Yeah, I think there's a lot of implications. This is one of the first major trends in work history, if you will. That sounds kind of weird to say work history, but typically you're talking about legislation driving a lot of changes that happen in the workforce in the U.S., specifically, holding taxes or whatever it may be. It's driven by legislation, benefits being tied to the employer, again, specifically in the U.S. But in most countries, legislation drives a lot of change. The gig economy is the first place we've seen, behavior and technology really drive the change. And the behavior and the technology are on demand, when we want, where we want, how we want, whether we're talking about how we live or how we work. And so now payments have to keep up with that new trend that's happening. So when you look at it, payments and legislation both have kind of been behind on this front because technology is such a leapfrog type of a sector. It moves at such a rapid pace. Payments are now going to have to keep up with that speed and that flexibility that the new modern workforce is starting to adapt to.
Great.
I think that's exactly right. So I think as the gig economy is kind of an on-demand labor source, I think that on-demand labor pool is going to expect on-demand payments as well. which means we'll need to be fast, we'll need to be flexible, and need to be able to get funds into these workers' accounts in as real-time a fashion as possible. So I think, as we look at things like the modernization of the Canadian payment system and the pending launch of real-time payments, I think that will really help to meet this need. But it also creates, I think, working capital issues for some of these businesses, where before payroll was predictable and you could time receipt of revenue with payroll cycles in order to make payroll week to week or month to month. With the gig economy, that becomes a little less predictable, and so I think there are some real cash flow implications there that I think we'll probably get into a little bit later in the discussion.
So, kind of working off of that, so it sounds like everything needs to be cheaper, better, faster, as you say at Western Union. Are there any specific, and Scott, you just kind of touched on it, not to put you on the spot, but any specific examples of a product or a platform or something that is working to do that?
Yeah, so I think at Western Union Business Solutions, we've been constantly investing into our network capability, ultimately to help facilitate international payroll and international gig economy payments, among other use cases. So we've been working hard to make sure we're integrated with local payment switches in as many countries as we can, and in all countries that matter, so that we can have access to the fastest liquidity and the fastest payments capabilities we can to facilitate these payments. I think when you look cross-border, value dating becomes really important, and the ability to move money around the world or have cash reserves around the world you can use to send these payments quickly and efficiently. And that's been a big focus for us over the last few years, and will continue to be a big focus for us going forward.
Thank you. Shifting a bit from payments specifically, how will just fintechs and banks in general need to evolve to this growing customer need? So, either kind of any type of broad fintech or specifically banks. Craig, go ahead.
Yeah, I think that there's a collision that's ultimately has to happen. We were in Slack channel the other day joking that all fintechs pretty much have to become banks and all banks have to become fintechs. And so it's just this all out race, to do that, right? Is it going to be innovation or is it going to be scale, right? Can the fintechs get enough distribution to matter? And can the more legacy based companies innovate fast enough to be impactful? And so I think what you're starting to see is a lot of synergy of people being more willing to work together. For a while, you saw all fintechs really partnering with really small banking institutions because, one, they probably had more venture capital. They could, throw their weight around a little bit. And those smaller banks were looking to compete. So they were looking for innovation. But now you're starting to see even some of the larger banking institutions kind of open their eyes as the fintechs become larger and larger and more impactful. So I think we're just, kind of headed on this collision. And I say that in a positive way of, fintechs becoming more like banks and banks becoming more fintech-ish. And I think that's a really positive thing, specifically for the gig economy. Banking really sits at the heart of all of this kind of payment infrastructure, and it often doesn't get talked about in that manner. And it's one of the things we've done at Gigwage that's kind of helped us to this point is really understanding the importance of banking at the heart of our fintech. I'll tell one quick story. We just hired a new compliance lead, and she was at a regional bank for a number of years. She was CFO at a bank, all these different things, and she wanted to get into fintech. But she said none of the fintechs understood the reason for needing banking experience. And I just thought that was super fascinating because we're on the hunt for banking experience to bring to, this kind of innovation that we have. And so I think you'll continue to see this merger of the two more and more as time goes on.
Sorry, I want to backtrack, Scott, before we go to you for a second, Craig. Something that I actually think is important that we should have done in the beginning is how do you define a gig worker?
Yeah, that's the ultimate question. I was talking to the chief economist at UBS, and that was one of the first things he said was like, the biggest problem is defining this, right? Before you can really have economic impact, how do you define this space? Because it has been neglected. It has not been defined. There's a lot of lagging indicators. People only report on it about once a year, if they report on it at all. But what we're seeing is the need to not actually define it, Elle. So the way we see it is, it's a very horizontal thing. It touches every industry. It's about 50-50 right now. So, you don't really have to define a full-time employee you don't really have to define a gig worker because they're everywhere. They have all kind of different names and they typically don't go by gig worker. The way Gigwage looks at it, though, is we think about anybody who's making money and taxes aren't being pulled out of it. So this kind of alternative way of working. And that could be like reimbursements. It could be, spiffs. It could be earnings, a lot of different things. And so we've really kind of started to say, does it actually need to be defined? Because it is so horizontal across every industry, every country, every sector. It's just another part of work.
Okay, great. Thank you. I think that clarification helps as we continue to dive into this question. So Scott, how will fintechs and banks respond to this growing customer base?
Yeah, so I think what's interesting about fintechs is they've really pushed banks to focus on customer experience. Where I think before the fintech revolution, it was pretty easy for banks to lean back and live with the way things were done in the past. We've seen a lot of fintechs who come in who have really focused on a niche problem, solved it well, and solved it in a way that's easy for customers and provides a delightful experience. And that's really pushed the banks to get better too. I think that really holds true in the gig economy space, where the payment's critical, right? The payment is the reason why people participate in these marketplaces. And being able to do that quickly and efficiently without a whole lot of issues from a customer experience perspective. So being able to collect banking details or details for, say, a wallet or some other alternative store of value, being able to validate that and get payment to it quickly is going to be critical. So I think we'll continue to see investment in user experience to make that easy and to reduce exceptions so that people can get paid reliably, so that they can have some certainty that they'll get their paycheck when they expect it, and that they'll have a pretty easy and fun experience while they're doing it. I think Gigwage is doing great work in this space.
Love it. Thank you. So, sorry, I'm going really off the cuff here as we continue the conversation. But I think that kind of what that leads to is, the discussion of gig workers being trending towards being underbanked and unbanked more than traditional payroll workers, Craig, as you alluded to. And so I recognizing that, banks can make a huge impact on the gig economy, right? What do you think banks need to do specifically in order to evolve to serve kind of the underbanked and the unbanked, and then kind of in turn further down the road, the gig economy?
Yeah, and, we've been doing a bunch of work. We do a lot of work with a company called Green Dot Corporation. They own a bank called Green Dot Bank. And one of the things and why we decided to partner with them was their focus on digital. So they're like a branchless bank, if you will. They're hyper focused on debit cards, specifically prepaid cards, et cetera, but they're an actual bank and they operate as a branchless bank. And the biggest thing a lot of these banks can do is they've got to kind of start to reconsider a lot of the real estate that they have and business kind of coming into those four walls, because the gig economy workers, typically low to middle income workers, there are a lot of high earners that are in freelancers, consultants, et cetera. But the bulk of what we're talking about when we say gig economy can fall into the low to middle income bracket, and they may not be strolling into your local XYZ bank. And when they do stroll in, a lot of the rules, regulations, qualifications haven't been designed for them. So one of the things that I think banks can do that I've seen Green Dot do is really focus on digital. Digital really democratizes the ability for people to get access to this stuff, right? And then it also lowers the barrier of entry to get the, kind of basic banking needs that you have, things like a direct deposit, right? Because oftentimes when we're talking about banking, it's not some sophisticated solution that people need. They need a place for their money to be deposited and a place to pay their bills. It's very simple. Western Union does a lot of great work around this as well. And so, I think going digital is really important. And people say that in passing and kind of like, oh yeah, go digital first, digital acceleration, digital transformation. But it's a real thing. Like the ability to put a bank account in the palm of someone's hands, where we see more people have smartphones than they do bank accounts. That is the biggest step that a lot of these traditional banks can take, is really focusing on a digital strategy that allows this stuff to be democratized and accessible.
Mm-hmm. Absolutely. Scott, any thoughts?
I think Craig nailed it. I think digital, and when we talk digital here, it's really mobile, right? I think having a nice website that looks good on desktop doesn't work as well for this population. So you need something that's mobile, that's really easy and intuitive to use, that makes it super frictionless ultimately to sign up for, whether it's a deposit account or a wallet that's addressable. And the other thing I'd say is being open to dispersing to non-traditional stores of value, because the wallet economy continues to grow, and we see more things kind of like PayPal. I think this has really emerged in a lot of developing parts of the world, like Africa and Southeast Asia, where there's just tons of alternative stores of value that customers can use in lieu of bank accounts. I expect we'll see that emerge in this part of the world too, in a more concerted way over the coming years, and I think banks need to be open to working with those sorts of alternative stores of value and being able to disperse anywhere on behalf of their business customers.
Thank you. Before we move on to the next question, just a reminder for everyone watching, please feel free to input any questions for the Q&A at the end. So moving on to cash flow, Scott, which you alluded to earlier. Labor is a pretty large line item on a balance sheet normally, or not normally, I would say, in a business with full-time employees and not contract workers. So, what's the impact on cash flow for a business as we see this shift from salaried to contract workers? And
yeah,
Scott,
so I think,
go ahead and start.
Yeah, I think ultimately it probably means businesses need to hold a larger cash reserve than they have in the past, or have access to short-term credit facilities to be able to handle these sort of on-demand payroll needs. The other thing I think it'll push businesses to do is to demand faster settlement from, say, their card processors or their card acquirers, where sometimes it can take a day, 2 days, 3 days to actually get paid when you swipe a card in a retail location. And that's not going to work so well in a gig economy dominated world, where they might have to pay the person who's doing the swipe that day rather than waiting 2 or 3 days to do a payroll. So I think it'll be a combination of, I think, different capital requirements, and I think banks need to get creative around short-term credit, and particularly for smaller businesses, so that they can manage the timing issues between payroll and receipt of revenue.
Thank you.
Yeah, I want to piggyback on that, because we're doing a bunch of work around kind of solving this cash flow crunch, right? And how do we help people get money from their customers to their contractors as fast and as flexibly as possible? So one of the things we saw when we came to market was, and I'll say the name that you can't avoid when you're talking about the gig economy, which is Uber. The thing that Uber has done when they really set this market, right? Because independent contractors, freelancers, contingent workers, whatever you call them, they've been around literally before traditional employment. Like, the first worker to ever work and get paid from a company was an independent contractor. And then over time, that kind of evolved again because of legislation. But so what Uber has done, though, they've brought technology to the forefront, and they've brought a massive balance sheet to the forefront, right? And so what did they do? They said, let's hire world-class developers, and let's use this venture capital, and let's pay people on demand, technology and money. And so what Gigwage has tried to do is bring that same concept to the table for people that don't have Uber's developers and balance sheet. And so as we've started to dig into that, what does that mean? Technology can only take you so far to moving money instantly, RTP, kind of on this side of the world, faster payments on that side of the world. ACH you got to have the money, right? And so once you've solved all the technology issues, which we've done at Gigwage, what we kept running into was, well, they're still running in lag because they don't have the accounts receivables yet. So we started to innovate around that and point AR directly into your Gigwage account and connect your operating account so you can transfer money in at any given time. But again, you still have to get the money from your customer, and that's become an issue. And so, we've even started to play with things like, liquidity as a service, where we're able to offer, to Scott's point, 7 days advancement of the funds, up to maybe 30 or even 60 days sometimes. Because in the gig economy, if you're not a traditional small or medium-sized businesses, you're a high growth company. So you may be expanding into 10, 15 different markets, but may not be capitalized yet. You might haven't got to that Series B, Series C, or Series D, where you have equity to support that balance sheet. And so you need access to capital. And so now these banks are having to start to think about, how do we lend in this kind of new way? It's not traditional staffing. It's not, how do we do this? And the fintechs like us are saying, hey, We've got some data. We've got great customer experience. Let's underwrite it in a new way. And so the banks that get on top of this will be able to help a lot of businesses solve that cash flow problem and grow. And then the banks are then growing their customers, right? And so it's a really, really interesting space. And to Scott's point, cash flow is at the root of all of it.
And, we've seen in the startup ecosystem a ton of companies around lending, right? Like micro lending, P2P lending, advanced payroll, per your point, Craig, SMB lending. And so, do you think that is a direct impact of this gig economy growing so much?
The lending piece?
Yes, just this influx of lending companies.
I think it's to Scott's point earlier when he talked about, he called it customer experience. I think when you think about user experience, you're talking about underserved markets where you're collecting this new form of data at a new point in the onboarding process. And so because you've got this underserved audience and this new data at a new place, it opened up the market for different types of lending, right? And so you have different insights and different data points at different points in the kind of, economic journey of an individual or in a business. So now you can lend in a different way to a different risk factor, right? And so I think that's really a lot of it. And the gig economy has been a big part of that. As people start to work different, they start to live different, they start to spend different. And if you can start to underwrite those differences, I think that's where a lot of the innovative lending opportunities have come from, based on this kind of behavioral changes and the ability to collect that data. So I think the gig economy is a part of that. But again, it's more generational, right? Millennials, largest generation in today's workforce. Gen Z is entering the workforce and they're coming on fast and furious and working how they want to work, when they want to work. So lending needs have changed. And I think the Fintechs are driving a lot of that, but it's oftentimes the liquidity is powered by a bank.
Yeah, I think there's been a lot of enabling technology too. When you look at the promise of big data to come up with new credit underwriting models, I think that's been a big driver here. And a lot of these areas they were ready for digital transformation. When you look at something like supply chain finance or trade finance, it was heavily paper-based. In a lot of cases, it's still heavily paper-based. And so there was tons of room for innovation. And I think a lot of fintechs have jumped up to fill that hole and come up with more efficient and more digitally native ways to handle a lot of these financing activities. And I think that will benefit the gig economy, but to Craig's point, I think there's a lot of other drivers here.
So I'm curious, what do you all think drove the gig economy to be growing at the rate it's growing?
Yeah, it's kind of what I mentioned earlier. I think it's behavior and technology, right? Like the mobile is probably the biggest driver. If you really start to just kind of think about it, the ability to push a button and get work, the ability to push a button and have someone do something for you. And then the ability for them to say, oh, I can pick what work I want to do easily. The mobile, call it 2008, 2009 was really the powering factor behind that. Even though a lot of the great gig economy companies didn't start on mobile, they started on web or I guess if you call it text message mobile. But mobile's the biggest driver. But again, over time, as the gig economy is across every generation, boomers, X, millennials, Gen Z. But as millennials have gotten older and older in the workforce, I'm about as old as you can get as a millennial. I'm an old millennial. I barely made the cut. As we've become hiring managers and executives, and even the majority of the workforce, you're talking about a group of people that kind of got really comfortable with mobile in their hands, and then Gen Z's entered, right? And now you're starting to see, they're technology natives all day. And then on the other end, you have baby boomers who are starting to see like their security isn't as secure as they thought, right? From a retirement perspective. And now they've got this opportunity to push a button and earn money. But I think at the heart of it was mobile technology for sure. And it continues to be a big driver.
Scott, any thoughts on that?
I don't have a whole lot to add to what Craig said. I suppose the other potential driver here is the specter of the financial crisis back in 2008. When you look at the timing, I think that probably freed up a lot of labor capacity across the economy, and there were a lot of people looking for things to do. And something like, say, driving an Uber was a good solution to that problem.
That's fascinating. That's great. Well, so talking about how it was started and fueled and thinking about the future. And, you know, Craig, I'm going to give you a little shout out here. You know, Gigwage has been around for how long?
Too long. I started the company 7 years ago.
So you were on the forefront of this. I mean, the gig economy started before Gigwage, obviously, but you were on the forefront of coming up with you had foresight that there were going to be new solutions needed for this economy specifically, right? So I would say you were one of the first. And what do you see as the future? Like, what is 5 years, which we all know we cannot predict anything at this day and age. But if you could, what does payments look like in 5 years for the gig economy?
Yeah, I think it's super interesting. The convergence of all of this technology, and as the rails get faster and faster that we're building on and building with and creating, you know, payments become table stakes actually, right? Like everyone's going to expect it to be instant and on demand at all levels, right? At the consumer level, at the B2B level, regular payroll, gig economy, whatever. So for me, what happens is it starts to look at, again, this promise of data and what you can do with that data and how that can drive experience and convenience around the payments, right? I think it gets really contextual and kind of cultured in what is the, you know, like at Gigwage, we went through this transition from thinking about transactions to thinking about payments, right? And so like a transaction is a very different thing than a payment. And when we started to think about what a payment meant, we thought about like technologies like SMS, right? Like you can know in real time with like, you know, text messages or even, you know, instant messages, it's sent, have they seen it? Did it fail? Did they get it? Right? And so this data around technology is really what's going to evolve. And I think as you start to look at payments, what's happening with the payment? What is the payment being used for? What does that tell us? And how does that dictate the next thing? I think that's ultimately where it's going to go. That being said, a lot of the promise of this instantaneous money movement, it's going to still take some time, right? Like we're very early in a lot of this stuff, but as more and more focus comes into play, I think that'll be table stakes from a payment rails perspective. It's the workflows, the applications, and the data that you build around it, and finding those unique use cases, like a lot of the people that y'all are letting in the Techstars.
Great. Scott, what do you see?
Yeah, so I mean, the quick answer is real time and ISO 222. But to kind of double click on that, to Craig's point, we're going to have a lot more data accompanying payments. And I think that it could be a springboard for innovation to really drive embedded finance much deeper into business processes, where the payment just kind of happens. And admittedly, it's gig economy companies that have really innovated in the invisible payments. But I think more and more we'll see that on the business side too. And so if you're a business who's using gig workers, it'll be very easy to pay them, to know that that liability has been extinguished, that they've been paid, and then to reconcile the bank activity without having to get people involved. The ISO 222 and the data that accompanies these modern payment systems will make it very easy to start to automate those processes and to remove some overhead from businesses so they can worry less about all this administrative stuff and focus more on just running their business and generating value.
Sure. All right, love this discussion. So folks, we are now going to jump into some of the Q&A. So go ahead and input your questions into the chat, and I will make sure to address them. So we will get started with a few questions for the group. Scott, what do you think, or how is the gig economy different, do you think, between the US and Canada?
So I'll confess, I don't have deep expertise on the Canadian gig economy, but I think that's okay because I think that the use cases are the same from a payments and a banking perspective. Ultimately, gig economy workers want to get paid reliably. They want to get paid quickly. They want to get paid on demand. And so I think, as I mentioned earlier, the push to deliver real-time payments in Canada, I think will be an important step toward meeting the needs of those gig economy workers in Canada. I think the US is probably a little bit more mature in terms of the number of gig economy companies that are operating, but I think the core use cases are more or less the same between the countries.
Okay, and then what about, on that note, you mentioned Africa earlier, and obviously Western Union is the leader in emerging market fintech technology and innovation. What if you want to touch on Africa or India or any emerging markets, like is there anything unique to those gig economies that's worth noting?
I think from a payment perspective, like I mentioned earlier, there's a lot more non-traditional stores of value in the emerging world. And so if you're serving gig economy operators who are in those markets, you will need to support payments to wallets. If you're in China, you'll need to support a payment to an Alipay wallet.
Mm-hmm.
And so I think that's probably the primary difference from kind of a Rails and use case perspective, and really giving the end customer the choice. So giving them the option to deliver to a bank account or to a wallet, or maybe to cash at some kind of retail location like a Western Union location. These are all really critical considerations in that part of the world.
Great. All right, next question. In a case where the payee passes on fees, what's your opinion on gig workers' acceptance of paying fees for a near real-time payment / deposit?
So we do this, we call this dynamic pricing. We allow this in our platform today, where depending on the operations, everybody has different margins, different workflows. And so as a business, you may be currently paying someone every 2 weeks or once a week. And because of your accounts receivables, you collect your money when you collect it, and you kind of try to run that traditional model. But in the cases of, when I push that button, how long does it take for the money to get to someone? Or can I enable them to push a button to get their money? And in those scenarios, faster becomes an option. And so what we've done is created dynamic pricing, where we pass the cost on, or we enable the business to pass the cost on to the gig worker. And it's typically an upcharge we think about it in terms of what is the type of payment. So what rail is it being sent on? Is it being sent via ACH? Is it being sent, direct to card? And then what speed, right? ACH has multiple speeds. Obviously, direct to card only has one speed. And based on that, we price it, right? And so the business may, send a basic ACH to you once a week, but you can then pass that cost on. The thing we've done at Gigwage, because it's a workflow that we've built around all of this, we've been able to drive the cost down. So now, for $1 or $2, you can get your money instantly and on demand, versus a lot of the other options out there that are really, really expensive and sometimes predatory. Check cashing places, pawn shops, sometimes even the early wage access products are pretty expensive. We've seen people spending upwards of 2 to 20% of their earnings just to get their money sooner. So we've driven the cost down and made that pricing dynamic, so you can pass it, split it, or consume the price as a business if you want. And I think these are some of the powers of technology. But also cash pickup. Scott mentioned that. We're rolling out something in the US as well with cash pickup, because again, digital is important, but people need a full banking experience, right? And so where can I go to get cash, right? Do you have ATM networks, which we're rolling out throughout the US? Do you have, point of sale integrations at, Walmart or wherever it may be, so I can put cash onto my card or get cash off? And those come with fees too. And so there's always going to be, because of the traditional infrastructure built for banking and payments right now, there's always going to be fees tied to getting your money. I think technology is driving that cost down and making it more accessible. And I think it's a decent business proposition to say, if you want your money faster, it costs a little bit more, but I don't think it has to be predatory.
Agreed. I do think sometimes it's hard for a person who's not deep in the payment space to recognize it actually does cost money to move money. Yeah. Scott, any thoughts?
I do think this will become a bigger issue as more and more gig economy operators go cross-border and start sending cross-border payments. Where going through a traditional correspondent network model is not going to work, right? Lifting fees will crush the value of a lot of these payments. And so it'll be an important consideration, I think, as these operators think about who to do business with, to make sure that they've got strong local connections, can avoid those sort of lifting fees and the high costs of correspondent banking, and ultimately be able to do local payments on both sides to do all of this efficiently without costing a whole lot of money for either the business or the payee.
Yeah, Scott brings up a wonderful point, right? Gigwage today is a US-based, US only domestic payment platform today. we're actually collaborating with Western Union now to roll out to a customer that has, freelancers in, I think, over 20 some odd countries. And, we want to leverage their expertise on a lot of this stuff. And I think having local kind of country managers or feet on the ground or banking relationships in those countries are going to be important. So you can figure out how to innovate and, what the business model needs to look like to be sustainable for not only the businesses that may be based in the US, but paying people all over the world, but also the receiving workers, right? And so I think there's a lot of opportunity for innovation there. But regardless of what it ends up looking like, costs now are high. If you can start to incrementally bring those down with innovation and partnerships and scale, I think it becomes super interesting. And again, the back to the original question, Elle, gig workers, I've always believed, are like this path to micro entrepreneurship. Doesn't mean they have to become entrepreneurs, but you do get to control your own destiny. So like in this case of getting your money faster, you actually get to decide if you want your money faster. It's a decision and a freedom and a choice you can make to pay for it or not to pay for it. And so I think that's okay, as long as everybody's transparent, everybody's being fair. This is the beautiful part of it. And then the last thing I'll say is it's actually transitioning into, this is one of the first trends that's starting to influence the traditional way that people work. You're starting to see regular employees want to get access to their money faster and sooner and on demand. And that's not just coming because they just kind of want it. Like the gig economy has shown that it's possible, right? And so if I've got 10,000 gig workers and 5,000 employees, and these 10,000 people in my workforce can get their money instantly on demand, but these 5,000 people got to wait every 2 weeks, eventually they're going to want their money on demand and instantly too. And so you're starting to see this influence in just the way that people work and the way they want to get paid. And the gig economy is driving a lot of that.
Yeah, I think the key will be predictability, right? If someone's paying for premium service, you need to deliver on it. And ultimately, paying employees is probably the most serious responsibility we have as payments companies, right? Payroll, gig economy payments, this is what people use to buy groceries, feed their kids, clothe their kids, buy medicine, et cetera. So it has to be predictable. It has to be, 100% perfect, or as close to 100% as you can get. Mm-hmm. And so I think it's important to make sure that the counterparties you work with have both the local access we talk about, but also strong redundancy and an ability to stay in business, right? You can't, they've got to be very trusted partners with these sorts of serious payments.
Kind of touching on a point that you made, Craig, about the desire for this, instant payment. I mean, do you think that the peer-to-peer payments space has made a huge impact on that as well, like the Venmos of the world?
Yeah, I think it definitely has there's a tie-in there because one of the things we've always thought about is, like, especially now, let's talk cross-border, right? And so if I am a worker in the US and, I've done this work and I get this, I have access to get this money instantly, we found a lot of workers are sending money sometimes, back home. Maybe it's to, Mexico, or maybe it's to Canada, or wherever it may be. And so the ability to now get paid from my gig work and then, be able to seamlessly transfer money to another individual or another person, something Western Union is phenomenal at doing and has been doing forever. That's a powerful proposition. So they're definitely intertwined and tied together. And I think you're going to see more and more innovative ways where P2P really plays into, how people work, how they get paid, and just how money moves in general. There's going to be a lot more P2P transactions, in which I think Venmo did something like $20 billion in volume in Q1 or something crazy like that. So there's going to be a lot more of that.
Love it.
Yeah,
Scott,
I think internationally there's a lot of schemes that are working to make this easier, whether it's the sort of payment alias stuff that you see in the India stack or in the new payments platform in Australia. Increasingly, you don't have to enter a long IBAN or a routing number and account number to send payment. And so I think that'll take some of the fear out of particularly cross-border P2P. And as people get more comfortable, I think we'll see a lot more volume.
Great. Kind of a shift, but you were all we're all touching on this a bit. So how do AR and AP need to work together?
Yeah, I love this question. And Scott, I mean, it's really a cash flow question that Scott kind of brought up earlier, and I'd love to hear him talk about it a little bit more. The way we think about it at Gigwage, though, what we call it is collapsing the flow of funds. You make it say reconciliation or, timing or matching up and making sure you've just got the money you need to spend. But the way we've looked at it is like, if you think about payments from a banking perspective, right? Accounts receivables has to come into a bank account. Accounts payable comes out of a bank account. And so at the heart of AR and AP is banking. And the faster you can get the money into the bank account, the faster you can get it out. And so we've started to really look at, we'll talk to a customer and they're like coming to Gigwage to pay all of these gig workers. And they're thinking with this accounts payable mindset. How do I compete with Uber, Lyft, whatever? So, hey, Gigwage, we want to pay people instantly. And we say, oh, well, we can do that. So start, how do you make money? And they're like, well, that doesn't have anything to do with paying people instantly. And we're like, well, actually it does, right? And so the ability for that gig worker to get a notification, go to your house, deliver the food, credit card process, and then get paid before they get back to the car. You can't pay them before you get back to the car unless we have a good understanding of how cash enters into your business. Now, in some cases, that's the credit card processing. In some cases, that's just the balance sheet. In some cases, that's a loan that they've gotten to advance the money. In some cases, it's venture capital just sitting there. But you have to really understand how money comes into your organization, accounts receivable or financing, to really impact how it goes out of your organization. And if you don't look at it from a comprehensive perspective, you're going to miss it.
Yeah, I think the other key here is just optimizing cost as much as possible, driving profitability. So we work a lot with companies who have cross-border exposure, which I think will be increasingly an issue in the gig economy space, to book, say, forwards or FX options, so that ultimately they can have some strong confidence in their exchange rates, which means that they know how to price their goods appropriately and can make sure that their revenue exceeds their payables, that they're profitable, which is critical, I think, for maintaining sufficient working capital and being able to handle a lot of these on-demand payroll use cases.
Sure.
Profitability, what is that, Scott?
I was just going to say, well, everybody wants the path to
Easy to say about a 170-year-old company, I suppose.
Yeah. Must be nice. We work in startup land. So going back to thoughts about future trends and whatnot. So, beyond payments and payroll for this gig economy, are there any ancillary product offerings in the fintech space that you think are going to need to evolve or, haven't even been placed anywhere yet that are going to sneak up on us?
Yeah, all of them. So right, there's no infrastructure for this stuff. Everyone's designed technology and infrastructure for the traditional way that people work. And so now this new way of working will require a new way of everything, a new way of earning, a new way of getting paid, a new way of savings for retirement, a new way of just savings, a new way of building credit, a new way to pay your taxes. Again, in places where your benefits are tied to your employer, a new way of getting access to that and handling the deductions to make those payments and automating it, a new way of banking. So literally every single thing that you could think about in financial services needs to be reimagined for the gig economy, especially at the consumer level.
I think there's a huge opportunity for banks and fintechs here, right? This, as Craig mentioned earlier, or maybe Elle, you mentioned this. This is there's a lot of underbanked people who operate in these economies, and so there's a big opportunity, I think, to provide products and services to those constituents, but they probably need to look a little bit different than traditional financial services products. And I think the thing that jumps out to me is really credit underwriting models. Being able to handle the volatility and timing of payroll cycles and being able to build credit models around that will be really crucial for financial services to make sure that we can serve these people well and provide them with the foundation they need to really grow their businesses or grow their financial health.
On that note, just something I'll add is we interviewed over 350 companies to join our next Accelerator, and almost 20% had solutions in credit underwriting and microlending or lending, as I was mentioning earlier. So huge trend right now, and definitely an effect of this gig economy. Okay, so we have about 10 minutes left for questions, and I'm not seeing any new questions in the chat, but please continue to add. We have 10 minutes to do so. So in the meantime, continuing to put the two of you on the spot, do you all have any questions for one another?
Yeah, I've got a question for Craig.
You
Craig,
beat me to it. I got one for you. Wait a minute.
All
okay,
right.
Go.
So what do you think is the biggest point of friction today in gig economy related payments?
I think the biggest point of, well, again, I think I went on a soliloquy about cash flow and accounts receivables, and I think that's a really big friction point that needs to be solved for mainstream businesses that aren't necessarily venture capital backed, et cetera. But it actually dovetails into the question I was going to ask you, which is, I think the biggest friction point is so much of payment infrastructure has been designed for a more predictable model of money moving. So risk and fraud and anti-money laundering and KYB and KYC, I think, are all kind of friction barriers. I think, for even at Gigwage, like one of the biggest bottlenecks for us is compliance and our ability to feel comfortable about the businesses sending, that are sending the money to the workers, right? And so for me, I think there's a ton of innovation that can happen around compliance, anti-money laundering, knowing your business, knowing your customer, and just, account takeovers. A lot of the fraudulent stuff that happens, I think, really can slow down the pace of innovation and the pace of growth. And so for me, that's the biggest thing, which, again, we just hired a longtime compliance banking veteran that we're super excited to have her on to clear up some of that bottleneck that we have and help us to continue to innovate around it. And I think if we do this right, we'll have a lot of IP around compliance in the gig economy and some interesting things we can do, which was the question I was going to ask you. How do you guys think about it at Woobs, right? Like, I know you guys move tons of money all over the world. How do you guys think about fraud and risk and doing that at such scale?
We think about it a lot.
Sorry, Scott.
Yeah, go ahead, Elle.
WOOB stands for Western Union Business Solutions, just for all of you listening.
For all the cool kids out there.
We like to pronounce our acronyms phonetically. I mean, fraud and risk are huge issues. And I mentioned earlier, we have products we've built specifically to help companies deal with FX risk and to manage their payables and receivables that way. But I think fraud is a big issue for us. We help businesses understand, say, invoice fraud, which tends to originate with email account takeover. Bad guy takes over an email address, dummies up an invoice with payment instructions that route to their bank account, send it off, and it looks official enough where the person on the AP department on the other side thinks it's legitimate and makes the payment, right? And so a lot of the fraud that we see happens kind of adjacent to the payment system. It's happening in other parts of the business operations. And so we work closely with them to understand the value of just simple solutions like multi-factor authentication, which everyone please enable multi-factor authentication on your email accounts, to help really protect their whole perimeter so that the bad guys can't get these sort of fraudulent things in the door to make payment. But fraudsters move fast. There are very smart fraudsters out there. And so it's a continuous battle, a continuous game of whack-a-mole, I suppose you could say, to make sure that we're staying one step ahead and arming our customers so that they can stay one step ahead as well.
Yep, absolutely. Okay, so I have another question that I just thought of. So there's probably a lot of people listening in that work for larger fintech organizations, and constantly looking to innovate per this conversation, right? With the gig economy. So more of an operational question for you, Scott. Western Union is a large organization, and we've been working with you for a couple of years, and so this is a perfect use case. But how do you all think about the innovation to solve this problem, including but not limited to like integrations with early stage companies are difficult, right? Let's be honest about that. But what are you doing kind of beyond the Techstars realm, to really innovate and stay aligned with what's happening?
Well, a lot of it really is, I think a lot of how we innovate is by opening up our platform for companies like, say, Gigwage to come in and use our capabilities and innovate on our behalf. That's kind of the joy of being at scale and having a really strong API product, is you can focus on core competencies. So we're focused on building the strongest network we can to take advantage of all of these new payment schemes that are coming, and leveraging our scale to be able to get fantastic pricing on FX so that we can move money around the world efficiently and share that efficiency with our customers. But we also, ultimately, innovation is solving customer problems. And so the way you innovate is by really getting under the covers on the sort of issues that customers are encountering. And then using both the core capabilities you have and your creativity to figure out how you can pull 3 tools out of your toolkit and help them solve that problem in an innovative way. And then you listen. You try to solve it. You talk to the customer. You listen. You understand where the friction points are. You solve those friction points, and it's a continuous loop, right? Innovation never ends, just like good customer experience or user experience development never ends. It has to be a constant process of building something, testing it, seeing the results of the test, iterating, and just repeating over and over and over.
Sure, that makes sense. All right, well, we are coming up on just a few more minutes. Anything you would all like to add? Any closing remarks, something I may not have covered that you think is important to cover? And no pressure.
I think this is an exciting and dynamic space, and I bet if we do this in 12 months' time at the next Payments Canada Summit, we'll have very different topics to talk about. 12 months is an eternity in this space.
Absolutely, it is. All right, well, first, thank you so much, Craig J. Lewis of Gigwage and Scott Johnson from Western Union Business Solutions. Oh, sorry, we got one more question in the nick of time. Okay. Well, I'll thank you again after. Can you speak to the importance of disbursements options for the gig economy and some of the trends you're seeing there alongside digital wallets?
Yeah, I think again, at Gigwage, we believe people should get paid when they want to get paid, where they want to get paid, how they want to get paid. And there's more and more ways of getting paid now, right? And so it's not just, can I link my bank account and get a direct deposit there? People want to direct a card. People want, there's a myriad of payment wallets out there. As we bring on new customers, we see people getting paid, right, on all different types of platforms. So we built Gigwage actually to be agnostic to where we send the money. And we've innovated around third-party transactions. We'll also provide our own on the back half of this year. But it's super important to be able to get people their money where they want it in non-traditional ways, because they've been notoriously underbanked and non-banked, but also just because people want a better way of banking and receiving their money. And I do think cash is a place that oftentimes gets kind of overlooked, but there's a lot of innovation happening around the ability to get access to cash as a receiving mechanism. And so, there's a handful of ways to send money, right? And, we definitely haven't talked about crypto much, and I'm sure that could be a whole another hour of conversation, but those optionality and flexibility is super critical in the gig economy, probably more so than anywhere else.
Scott, ultimately, end customers, the workers here, want to get paid into a store of value for a specific reason. And I don't think we as providers need to understand the underlying reason. We just need to help them get their business done in the way they want to do it. And so I think providing that optionality is going to be critical in the gig economy and in many other use cases across the financial services industry.
Yes, cannot agree more.
The last thing I'll say too, you're starting to see with digital wallets, not only are they becoming a store of value, but they're becoming more dynamic now, right? And so as you see the neobanks, the Fintechs, all of these kind of places to receive this money, they're starting to add robustness and additional services around that kind of just, you can receive your money here. They're starting to slowly remove friction from doing things within it, right? Everyone wants to have now a full-on checking account, et cetera, et cetera. So I think you'll continue to see a robustness around these digital wallets that'll start to evolve and look very much like, what banks have always looked like, but it'll be in the hands of new users with new technology.
Yes, absolutely. There's just so many exciting things happening in fintech and payments, due to this gig economy, Gen Z being the first digital first generation that we've seen. I'm sure I know COVID has had a great impact on it. So it's the greatest time, I think, to be innovating in this space. And it's been fantastic hearing from the two of you. So Scott Johnson, head of product at Western Union Business Solutions, also known as WOOBS. Thank you very much. And Craig J. Lewis, CEO and founder of Gigwage. the rocket ship in gig economy payroll and payments. So thank you again. Really appreciated the conversation. And as I mentioned on the top of the hour, if you would like to continue these conversations in breakout rooms, you can go to Brain Date, which is located in the network section of the Summit site. So thanks again, and everyone have a fantastic day.